All right, guys, I got my mortgage expert with me. He's going to explain to you the cost of waiting to purchase a home. It's really exciting stuff, really interesting stuff. Some things people don't even think about. So, welcome in Eli Hernandez. How's it going today, Eli?
What's happening, man? Thank you so much for having me today. This is fantastic stuff. And this is what I've been searching for and wanting to provide to our communities. Basically, why buying a house today versus waiting, right? The cost of waiting. And everyone's trying to understand what those numbers really look like. And what's really cool is that we have truly the science behind certain things. Seeing from now and 12 months from now, why buying today? What is the benefit today versus waiting? So this is just, what's all about. And I geek out on numbers. I'm a mortgage
Mhm.
guy. I love numbers
Perfect.
and love sharing strategies and scenarios with our clients and community to share like why home financing is building wealth above all anything else.
Yeah, and I think the biggest question today I receive from buyers, first-time buyers, is why should I buy today? Why shouldn't I wait? Why shouldn't I
Yeah,
wait until rates come down? Or why
absolutely.
shouldn't I wait for certain things, right? So I go ahead and feel free to show them what
Yeah.
they're losing out on.
Do you see the screen there?
Yes, I see it.
Awesome. So, you know, biggest things that people are afraid of, I think, and why people are waiting is one, house prices, right? What are house prices going to do? Are they going to drop? What's going on? Are we actually going to have appreciation? All those things. And I think ever since 2020, everyone saw those house prices skyrocket, and everyone thought since then prices are going to go down. It hasn't happened yet, even in the last
No.
couple of years with high level of interest rates, just hasn't happened yet, right? And so
Yeah.
house prices is one part of the equation. The other part of the equation that people are nervous about is interest rates. The interest rate's going to come down, so I'm going to wait until those interest rates come down. And
Yeah.
it's like, okay, I get that. I understand that. Better monthly payment, see what that looks like. But by waiting for is there just things that you're really losing out on? And there really
Yeah.
is. Right from the top here on this report, and I could do this for all scenarios out there, right? So when Brandon introduces our team and you're wanting to know exactly what it takes to say, all right, what is my scenario, right? Today I'm looking at San Jose, California, well, and I'll go through some different numbers historically, what's going on and what we're forecasting. And that's what's
Yeah.
in this document in the next page. But we can do this in all parts of California, and making sure that the numbers you see here with your financing and how much you want to put down and all those things, we're going to go ahead and put that scenario together for you. But here's an example of doing something at a $950,000 purchase price, as you can see here in the beginning,
Yeah.
and then just doing 10% down. Nothing crazy.
Mhm.
Just something kind of in the middle between 5% and 20%. A lot of people know those numbers and those down payments. So I just want to do something right down the middle, nothing too, fancy here with a bunch of money down and things of that nature. But two things are going to show here. You're going to see appreciation gain, right? We are anticipating in San Jose, California, in 1 year to have almost 5.5% of appreciation.
Yeah.
So that means by the end of the year, this $950,000 house is now worth $1 million.
Yep.
Okay, so that's part of the equation. What do you think? Is Brandon, am I on target there? I mean, you're about
Yeah.
house
Very
prices
on
more than I
target.
am.
Yeah,
I'm
that's
on target.
even it's a
Okay.
little low for the last couple of years, but overall with everything, yeah, that sounds about right.
Sounds about right, about 5% or so. And that's a pretty, very conservative number. Typically, anywhere between 4 and 6% are very normal,
Yeah.
with all housing around and across the nation. So
Yep.
different markets have different things. But San Jose, what they're forecasting today is about 5.5.
Yep.
But the payment difference, we know that interest rates are expected to come down. So we have this in this equation. We're not crazy thinking this is the payment. We know that interest rates come down. That's why you see the cumulative monthly payment difference here on top showing a negative amount, that your
Yeah.
payment is probably, if you did wait a year from now, is $200 less a month. Okay. But you're also losing out $51,000 in appreciation.
Yeah.
And so with these two numbers together, plus the cost of refinance, right? We all know that there's going to be some cost if you're going to refinance to that next number. We go ahead and throw that in there for you. So we're trying to give you everything you possibly can to make these numbers truly what it will be from 1 year from now.
Right.
Okay. So as you can tell, $45,000, if you bought today with the interest rates coming down, you're going to be benefiting at $45,000. What does that truly mean? Let me share a couple things for you in the next page. All right, property values, 950. We just talked about that, up to $1 million. The loan amount, if you actually waited a year, your loan amount is actually a lot higher, right? At
Right.
10% down. So, you're going to have a down payment set of 95,000. Now you got to come up with another 5,000 for that
Yep.
same house in that same area, right?
Yep.
Just by that appreciation number if house prices don't come down, and not anticipating rate. We talked about that 7.25, 6.25. There's a few different places, right? There's something called CoreLogic, Black Knight, what I'm using here, MBS Highway. There's all these different, smarter people than we are that talks about
Sure.
forecasting, and they're pretty dead on. Like last year alone, we're talking about appreciation to be about 4.5%
Yep.
across the nation. Of course, different markets, different things, right? Brandon in California, I'm based in Arizona, but we travel back and forth. We are seeing with what they're saying in our towns exactly what they're forecasting. So
Yeah.
when they say that it's going to be 6.25% down the road with interest rates, they're pretty maybe off by 1/8 of a point, so nothing ridiculous. So they're pretty much on target when it comes to rates. So
Yeah.
we're all saying that we'll probably be in the low sixes by that time.
Yeah.
Today we're in the low sevens, high sixes. By that time, we should see low sixes, maybe high fives if things get a little aggressive with things,
That would be nice.
with all the different inflation. Yeah, right. Crossing fingers. But then, with that rate in place, you go ahead and, your mortgage insurance just doesn't really move a whole lot, right? It's,
Right.
it's just going to be around the same number because it's about loan to value. And then ultimately, I wanted to share cash to close, right? If you're waiting, the only thing difference, closing costs, I have it as a flat fee right now.
Right.
Um, Cash to close 110 to 115. But this is a piece, and the only difference there is because of the down payment, right? The value of
Right.
the house is expected to go higher, so that $5,000 difference cash to close is there. But there's a piece here that's very different, and maybe Brandon, you can speak more into this, is that if you're buying today versus a year from now, because rates are coming down, typically what we're anticipating and what you may be seeing is if rates start coming further down into the low sixes, there's going to be more buyers. Am I right?
Yeah. More demand for sure. 100%.
Right. So if more buyers coming into the market, that means that the market itself is probably more of a seller's market than a buyer's market, all in
Totally.
theory,
Totally.
right? So if today there's not a lot of buyers because they are waiting, this is the absolute huge piece of an opportunity why you're buying now. And what's not in this equation that also will make this number 45,000 even greater is the fact that you can probably get some seller concessions
Yep.
or seller and help you with the seller concessions. Did I say that right? I
Yep.
think I said that right.
Exactly. Seller credit, seller concession, getting part of
Are
those
you
closing
seeing
costs.
those on your contracts now? I mean, you're
It
doing a couple of
depends.
contracts a month.
It really depends. If it's condo, townhome, for sure, easily. Not
Okay.
much on single family side in most of the
Okay.
Bay. Some parts of Alameda County for sure. But most of the Bay is still pretty hot right now. But condo, townhome for sure.
Sure. Okay. And so there's an element of there that we're not talking about and not even in this equation. This is a
Yeah.
very conservative, as you can tell, analysis,
Yeah.
right? We know appreciation in San Jose is going to be 5%. We know that, there's a cost to refinancing. There
Yep.
is a difference in monthly payment. We calculated all those numbers for you. But still, if you start today, and you wait, and then in a year later, you should be around a $45,000 net gain in value and wealth as you're building real estate. And of course, it's just going to continue to go forward
Yeah.
and help you with that.
I was just going to say the most exciting part about this is only 1 year you showed us.
Right.
This is not waiting 3 years, 5 years, which I know a lot of people have done
Yeah.
in these uncertain times, right? So I totally could see that number being a lot bigger, right? If it's 3, 5 years. So
Oh
that's
my gosh. Yeah. I mean, if you're talking about another couple years after this, we don't even have to worry about saying, oh, what's 5% of a million or anything. Let's just take the number at 45,000 times three is 150 grand. If it's 150 grand in 3 years, look what your initial cash to close was. It was 110.
yeah,
You already made up in three
yeah,
years
yeah.
$40,000 more than what you punched in. Um,
I see
and
it all the
so
time. See it
yeah,
all the
right,
time.
right. Yeah, you see it all the time, and that extra 40,000, and then it continues. And again, by getting in now, your appreciation is only going to be more exponential. If
Mhm.
more buyers and interest rates come down, it's just the tale as old as time.
Mhm.
That appreciation would be now instead of that 5%, maybe it's now 7 next year. Maybe
Yeah.
it's 8 the following year. So again, very conservative numbers to start with and showing just the huge win of why buying today versus from 1 year from now. But when you get into that home, you're going to be excited when you see 3 years from now that, wow, we go ahead and made up all our money,
Yeah.
then some. And especially with seller concessions today, because that can dry up very quickly. We could
Yeah.
see it happening now, and in 30 days, no one's giving anything.
Yep.
So, and that's just more money back in your pocket, and just able to structure the deal even better for you.
Yeah.
Instead of 7.25, you're now coming out of the gate maybe at 6.75, like you're seeing in this level
Yeah.
here. But you're not seeing the additional cost to that. The seller's going to take a piece of that for you, and now you still have the appreciation. You still have everything else you're gaining. Down the road in a year, 3 years, 5 years from now. So
Yeah. Yeah. I
pretty
think
awesome
that
stuff.
the saying that's old as time is don't wait to buy real estate and wait. Right.
That's it. Yeah,
It's so corny,
and
but
this
it's
is the
so
perfect
true.
example.
Yeah, it's very corny, but and this of course is only for buyers who are ready, willing, and able, right? This isn't people who are in a
Absolutely.
situation where they can't afford this. So if you're in that situation where you are ready, willing, and able, and these payments make sense for you, they're not astronomical in your specific scenario, then you may want to consider this because of this scenario, to show that benefit of buying now.
Yeah, absolutely. And what's great is, it takes a quick initial conversation to just get to know you a little bit, right? When Brandon sends us over, we just want to get to know you a little bit, understand your scenario, where you're at. And then, it just takes probably a day or two to truly see some numbers of what that monthly payment would be for you. So we're here to help and move as quickly as possible for you. So if it is something that makes sense, we want to get you involved quickly. And of course, if there's a plan that needs to be placed, like Brandon was saying, maybe with monthly payment, some money in the bank, things like that, we're here to help to be those accountability partners for you as well. So
Yeah. We're here to set up a plan and get you to that goal. So thank you so much, Eli, for coming on and showing
absolutely.
everything here. This is awesome, and I can't wait to do a little more of these so we can teach the masses. So I appreciate it, and hope you have a good day.
You too, man.